Birla Corp has delivered a decent set of numbers. The company has posted a top-line growth of about 13% and more than 65% growth in the bottom line. Today we have with us CFO at Birla Corp, Mr. Aditya Saraogi, to discuss the Q1 earnings and take us through the outlook for the company for the year going ahead. Good morning, sir.
Good morning.
My first question to you is that in this quarter, the company has seen a volume growth of about 4%. What can be the volume growth expected for the whole year going ahead?
My sense is it should be more than 4%, slightly more than 4%.
Okay, sir. What cost reduction steps can be expected on account of this in the next quarter?
Not specifically next quarter, but in this financial year, we have taken several measures for bringing down the cost. One is the commissioning of waste heat recovery at our integrated plant at Maihar. It's a 12.2 megawatt plant. So that will bring down the power cost at that unit substantially. Secondly, we are ramping up the production at our captive coal mines at Sialkoti. That will help us bring down our fuel costs. Thirdly, we have already commissioned a railway wagon platform at Kundanganj. That will help us bring down our transportation costs at that unit. And finally, we are putting up solar power plants across most of our units, which will further help bring down our power costs.
Okay, sir. Now, petcoke prices have been softening. What reduction in power and fuel costs can be expected for the second quarter and the second half of this year?
The second quarter, because of the carrying inventory, there may not be a significant impact. But in the second half of the year, definitely we should have moderation in the fuel costs. So currently, the prices are down by almost 35%. So depending on the usage of petcoke, which in our case is around 50%, so the fuel costs I would expect should come down by at least 15%.
Okay, sir. How has pricing been for Central India for the month of August? Are we seeing any major cuts? If yes, then how much have the prices been reduced for the month under view?
Prices typically, since it is a monsoon season, the prices have softened a bit from the peak, but compared to the previous year, they are still at higher levels. And our expectation is post the monsoon and second half of the year, given the thrust of the government on housing and infra, the prices should pick up again.
Okay, sir. Your share from the non-trade segment has come down to 17.7% from 21.2% a year ago. Can you tell us the reason behind this and what can further be expected from this segment?
See, if you see our capacity utilization is close to 95%, so we are not under any pressure to grow volumes. So what we are doing is we are moving our volumes from less profitable segments to more profitable segments. So that has been one of the main reasons for our specific focus on premium segment, on trade segments, and on sale of blended cement, each of which give us higher margin.
Okay, sir. Thank you so much for talking to Bloomberg Quint.